So part of the strategy to stay awake is we're going to travel around Asia together. And this session is based on a case study in urban finance between the three cities. This is the full case study. It's available for free online in English and Vietnamese, if you happen to read Vietnamese. And this was a study that I did together with the Fulbright University of Vietnam. And one of the lead authors is sitting in front of me, Dr. Zhu. So if anything is unclear, don't ask me, ask Dr. Zhu. So what we're going to do first is, this is the study. We're going to first look at Ho Chi Minh City. And we're going to look at first the revenue side, where does their money come from? And then we'll look at the expenditure side, what are their responsibilities? And all three cities have slightly different ways of classifying things. But after we look at the cities individually, we'll compare them to each other using a similar framework. So on the revenue side, they have three general categories, and then we'll go look at each one independently. So when we look at each category, I will explain in more detail what it means. So the first category at the bottom, the dark one is what they call local regular revenue, which was about 25 to 30% of the total revenue for the city. Slightly larger is what they call local special revenue, which is on average about 30, 35%. But in keeping to what we talked about shared taxes, the largest category, about 40%, is shared revenue. So let's look at each category in a little more detail. So the local regular revenue has, at the bottom, very small, are loans, municipal bonds. Then you have license and registration fees. They have a local lottery, so there's lottery income. Revenue related to land and property, so not necessarily property tax, but related. And then this category is miscellaneous, it's others, which over time basically went down. Then the next category was local special revenue. And you essentially have what they call record over budget and remainder of the previous year, two categories. But the main new revenue source is sale of land use rights and houses. So the land ownership system in Vietnam is quite different from many countries like the United States. In the US and in many countries, you can buy and sell land, just like any property. But in Vietnam and China, what you buy and sell are rights to the land, and it's what we call leasehold instead of freehold. So as the city grows and you convert agriculture land to urban land, when you sell those rights to convert it, it can be quite expensive and the city can earn a lot of money. But eventually, all the land is urban and you run out of land rights to sell. And you'll see the same thing in Shanghai. So you either expand the city boundaries or you find a new revenue source. This is why they call it special revenue. It's not sustainable in the long run, but it's significant short-term revenue. And you'll see something similar with Shanghai, but not in Jakarta. Jakarta's system is like the US, you just buy and sell the land. But you'll see in Jakarta a very significant property tax. And then you have the third category of shared revenue. And you have the value-added tax, that's about a quarter. Company income tax, also significant, about a quarter. Very small excise tax of domestic goods, personal income tax, non-refundable aid, small. The next big one is transfer from the central government. And then you have fees and charges. So the main ones are value-added tax, company income tax, transfers, and fees. So what do they do with the money? Let's look at the spending side, the expenditure side. And there are three main categories: investment, routine, and retained earnings. So the biggest over the 4 years is investment, then routine, then retained earnings, and then very small debt repayment. But there are significant transfers from Ho Chi Minh City to other regions via the government. If you look at expenditure as a share of the revenue, it's not even 30%. But it's still almost 10% of the national budget. And if you want to look at the ratio of what they call investment expense ratio, which is number 3 divided by number 2, it's about 50%. Which means they spend a lot more on investment than routine. So the biggest expenditures for routine are in the areas of economic sector, almost the same in education and training, and 2 other major areas are health and public administration. And if you don't want to do the math, we did it for you. The percentages are here. About a quarter on economic sector activities, about a quarter on education and training, and then 13% health, public administration about 11%. So you can see a lot of this is consistent with the principles we talked about before lunch on assignment of expenditure responsibilities. And what about investment? So almost half of the investment is on transportation. And other investments, relatively smaller, services, industry, education, and training. And if you want to make a comparison in Myanmar, I would be thinking about Yangon, the largest city. And I'm not saying this is good or bad, it's just descriptive, based on priorities and their political system. Yangon might be different, but that's not necessary. We see big differences with Shanghai and Jakarta as well. So they're just 3 examples of actual practice. And so where does the city get the money for these significant investments? So this is where you have to be careful when you compare budgets. I said this is public investment, but almost 40% comes from households. About 1/5 from the state budget and 1/5 from FDI. And if you take the state budget together with state enterprises, it's about 1/3. And not state enterprise businesses is about 10%. You can also look at investment not by sector, not by source, but by sector. And it's industry, transportation, and services. And to really interpret this correctly, you have to know what they mean by each of these categories, how they define, for example, services. And I won't go into that level of detail now. This is just an overview so you have a rough idea, but I will leave the full study with all the details for the Renaissance Institute Library. And what I'm going to do is go through all 3 cities first, compare them, and then I think you will have some questions and clarifications, but it might be easier to see everything first. So we're going to go from Ho Chi Minh City a bit north to Shanghai, and it'll be the same basic structure. We'll look at expenditure in general, detail, revenue in general, revenue and then expenditure in detail, and I'll try to highlight some of the differences. So here we're just looking first at what they call the local budget, and this just shows the trend over time. And some comparisons like we did with Ho Chi Minh City. If you want to look at revenue, in Shanghai compared to the national budget, it's about 15%. And if you see the local budget to revenue, like Ho Chi Minh City, there are significant transfers out of Shanghai to the national government. The local budget to revenue is only 40%, which means, again, there are transfers to the central government. Or you can see that the revenue compared with national budget is 15%. Their local budget compared to the budget is 6. So again, either way you look at it, they create a lot of surplus that goes to Beijing to be used for other things. And if you look at the composition of the revenue, they have 2 categories only, regular and shared. 2/3 regular, 1/3 shared. So then you might want to ask, well, what is regular and what is shared? So the structure of the regular revenue is as follows. The biggest item, over 1/3, is a local business tax. The other 2 big sources are local fees and charges and local enterprise revenue. But they also get 1/4 from debt financing. So this was different than what we saw in Ho Chi Minh City. But part of this presentation, Ho Chi Minh City also borrows, but through an intermediary institution. So again, when you make comparisons, you have to know what they include and don't include. And Shanghai actually has 3 local budgets. They have budget, off budget, and extra budget. And it has to do with whether the income source is approved by the central government or not, and how it's approved. So the regular budget is kind of regular sources around the country for local government. And the extra budget are specially approved other sources. And then they have a category of what they call non-sanctioned or not formally approved sources. So it gets complicated. So we've made adjustments to consolidate. But the Ho Chi Minh system is in many ways more transparent. Debt financing, so where do they borrow from? So half are from domestic bank loans. Almost the rest is from other domestic funds. Very little from capital markets via bonds, only 1%. So it's basically bank loans and domestic investment funds. And then remember the other category, about 1/3 of the revenue was sharing. And this is similar to Vietnam. Most of the tax sharing came from value-added tax. They call it the enterprise income tax. You can call it the corporate income taxes. But they also get a significant amount from the personal income tax. And their share of the total amount collected for these taxes, it's about 17%. That's significant. So before we go to expenditures, in terms, again, of comparing and transparency, there's one very important item that's not on the budget numbers I showed you. There's one revenue source not on the budget. Remember I mentioned the sale of land use rights? It's a very important revenue source, very significant in Shanghai, but it's off budget. The whole new downtown area was developed through the sale of land use rights, long-term leases. And if you've been to Shanghai, a lot of the area around the Pudong International Airport was developed the same way. In Ho Chi Minh City numbers, they were in the budget. In Shanghai, you don't see them anywhere. So it was really a challenge to try to do the Shanghai chapter. So I'll tell you an after-lunch story. For Vietnam, we had a great team from the university, so we had many ways of getting information. But in Ho Chi Minh City, but in Shanghai, we used one of my students who was originally from Shanghai and worked for the Shanghai city government. So she was local Shanghai, she spoke Shanghainese, and she worked with these people. But when she came to work on the study, she was treated like a foreign spy with great suspicion. And the only thing they gave her was tea to drink, no data. But through another friend I had who actually ran the finance office, he agreed. We only wanted official information, nothing that would get anybody in trouble. And he intervened and said, yeah, you can trust them. We will give them our public reports. So this kind of research can be sensitive and difficult. So if we want to look at the expenditure side of Shanghai, here's an overview. So they have Capital construction is about 1/5. With technical upgrades, that's kind of rehabilitation of infrastructure. About 20% on science, education, culture, and health. But as another example of lack of transparency, about 40% just says other. Indonesia. So now we're going to look at Jakarta. So the revenue structure, again, they have 3 categories, so it's more similar to Ho Chi Minh City, but the categories are different also. The categories are also different. So about half is what they call local regular revenue. About 17% is local special revenue. And about a quarter is shared revenue, which they call equalization funds. So we'll look at these categories in a little bit more detail. So almost all of the local revenue, the local regular revenue, is local taxes. So if we go to the first revenue slide, so we're going south now, okay? We started Ho Chi Minh City, we went north, now we're going to pass Ho Chi Minh City, go south to Jakarta, okay? We chose 3 cities. Shanghai is essentially the commercial capital of China. Ho Chi Minh City is the commercial center, business center for Vietnam. And Jakarta is both the center of government and the business center for Indonesia. And these cities are all treated like provinces or special regions, so we thought that they would be interesting to compare. Our choice of cities was not random, but they have many similar characteristics in each country. I know that virtual travel can be very confusing, so we're kind of easing into our third city now, because you have to kind of change again, and the context is different. So I'm sure you were not the only one who thought I was going too fast, but you were brave enough to speak. Thank you. So in these 3 categories, half is local regular revenue, half of all the revenue, the bottom here. And then the other major source are shared taxes, shared revenue, what they call equalization revenue. And the other major source is what they call local special revenue, which is essentially financing. So you have own source revenue, shared central revenue, and financing revenue. And like the other 2 cities, now we will go into detail in these 3 categories. And the first category, half of the revenue, regular local revenue, it's quite simple because almost everything comes from one source. Local charges and fees, very small. And you can see no debt in that category because it's in a different group called financing. So if 90% comes from local taxes, are you interested to know what taxes? Curious. Me too. So this is very different from the other 2 cities. Very different. 60%, almost 2/3, come from taxes related to vehicles. Licensing vehicles, registration of vehicles, operating permits. And this is normally done at the provincial level, but Jakarta is like a province. Has anybody been to Jakarta? Anybody here ever visit? It's good because people with cars can afford to pay a tax if you can afford a car and you can afford to operate the car. With motorcycles, but of course a lower tax because you're not rich, but you're not poor. If you're really, really poor, you take the bus. And economists like the tax for 2 reasons. Lots of revenue from people who can afford to pay. And people who drive impose costs on other people, pollution, traffic jam, noise. So if you make it a little bit more expensive, maybe you reduce the traffic a little bit and improve public welfare. And it's a sustainable source of revenue. Do you think cars will disappear from Jakarta soon? No, the trend is like this, not like this. And the other major source is property tax. Significant but smaller are taxes related to recreation or hospitality, like a special hotel tax or a bed tax or an entertainment tax or a meals tax at a restaurant. Again, mixed sources. I think they have a special restaurant tax and hotel tax of about 10% that just goes to Jakarta. So if you stay at a hotel in Jakarta, they say the rate is X plus 10% service tax that goes to the hotel, and then together 10% that goes to Jakarta government as a hotel tax. So plus. First plus, 10% service charge to the hotel.
Yes.
And then you also tax the service.
Yes.
The next 10% goes to Jakarta government, so it's the rate plus 21% total.
Ah, I see.
And many places like New York City have a hotel tax. They call it like a bed tax. It's per room, essentially. And for local government, it's good politically and financially. Do visitors staying at hotels vote in local elections? Hotel guests vote in local elections. So you don't care. And as long as it's a small tax, so you're still competitive, they can clearly afford to pay a little bit more. And the meals tax at restaurants is only for more formal or more expensive restaurants.
Yeah.
And in Massachusetts, the location of Harvard, there is a state sales tax, but local government can add a little bit as a hotel or meals tax that just goes to local government. So these are two examples that are taxing the same thing, basically hospitality industry, but the consumers. So in Jakarta, it's a special hotel tax and a special restaurant or meals tax. In the US example, it's just added to an existing consumption tax. But when you think again about political economy, the politics are good because, again, these people are not local voters usually, or they're more upper income voters who can always afford a little bit more. You don't tax very simple food stalls or guest houses. You're getting at the upper income consumer. The key is not to be greedy. Have it modest, small. If it's too high, you will make your businesses not competitive. And if it's too high, you have a very powerful incentive to cheat. If you want to look at the local user charges in a little more detail, I provide an overview for you. Almost half are related to health and sanitation services. Another large source are charges related to land, and it's mainly licensing, permitting, regulations, things like that. And charges related to vehicles and transportation is the third major user fee. And then we have the tax sharing, which was the other major part of their budget. And you can see you have three categories. The first, about 2/3, is share of taxes. And then they have a little bit of what they call share of non-taxes. So these are things that look like taxes but have special names. So together, about 2/3 of the sharing revenue are from taxes or things that look like taxes. But what's interesting is that 1/3 is from the grant transfers to equalize between rich and poor areas. And we'll see in our case study the last day, for smaller towns and cities, this category is about 90% of local budgets, the transfer funds. And even though Jakarta is quite rich, they still get significant transfer money, and that has to do with the formula and the history. And we'll go into the formula more when we do the case study on decentralization. Government, which is general administration, education and health, and natural resources and the environment are the three major sectors. So if you're not too dizzy, we're going to now put these next to each other to look at some similarities and differences. So revenue composition, and they're presented in the order we cover them. So Ho Chi Minh City, Shanghai, Jakarta. It's a little hard to compare because the categories include different things in different cities. So you want to be careful on this. So I think it's a little bit more helpful to look at some specific categories or items that will be of interest to you. Looking at own source revenue and shared revenue, which are the more common ways to classify. So we took the data, rearranged it a little bit so we could compare it more accurately. And you normally see two big categories. One is own source revenue, which are local taxes, local charges, and other things. Whether you call it regular or special or something, it's basically what you generate by yourself. And then the other category is money you get from the outside, which is normally tax sharing, getting a share of a central tax, or revenue sharing, which are the grant transfer programs. So if you look at own source revenue, the very top, total, you can see that Jakarta has the most from own source. And if you start looking, for example, at local taxes, so we list these as what we call sustainable. It means you can do them every year. You don't run out of land, for example.
Local tax.
So for the local own source revenue,
Yes.
we have what we call sustainable,
Sustainable.
and incidental, which means you cannot do them all the time. So incidental, for example, selling government assets, that only happens time to time, or a budget carryover. For Ho Chi Minh City, this is selling government assets. Over in Indonesia, the main item is budget carryover. So these are not things you usually use for planning. So if you look, for example, at what we call regular sustainable revenue, you want to look at something like local taxes. Ho Chi Minh City, 0%. Shanghai, 50%. Jakarta, 70%. Debt is interesting. You have Ho Chi Minh City about 16%, more from Shanghai, and Jakarta, 0. Then if you look at the revenue sharing side, you'll see that both Ho Chi Minh City and Shanghai get about a third of their revenue from tax sharing. Jakarta is smaller at about 18%. And again, if you look at the different taxes, there are some similarities between Ho Chi Minh City and Shanghai, but Jakarta gets almost everything from the personal income tax. And then the grant part of budgets, you can see down here that it's relatively small for all three, but Shanghai is 0, Ho Chi Minh City's in the middle, and Jakarta's about 9%.
It's transfer.
The basic conclusion from the authors is that Jakarta has a much more sustainable source of regular own source revenue. And this is why. This is the picture that explains our conclusion. So, sorry, this is a little bit different order. So you have Ho Chi Minh City, Shanghai's over here, and Jakarta's in the middle. So Ho Chi Minh City, Jakarta. And we think two of the best sources of revenue, whether it's a tax or a charge, are vehicle-related or land and building related. So vehicle in Ho Chi Minh City and Shanghai, 0-0 versus 39% in Jakarta. Real estate related, about 3% in Ho Chi Minh City, 2% in Shanghai, 16% in Jakarta. So the consequence is that relying on these incidental, non-sustainable sources, 97% in Ho Chi Minh City, 98% in Shanghai, and about half, 45%. So It's not saying that Ho Chi Minh City or Shanghai have bad systems. It's just making a comparison using the main criterion is long-term sustainability and equity. And it's clear that both Shanghai and Ho Chi Minh City are prospering and they're doing very well and growing rapidly. But for example, in Shanghai, some of the biggest infrastructure is not in these budgets anywhere. And the same in Ho Chi Minh City. And because they're so important to national development, there are some national strategic projects, often with... So in our research, we also include several case studies describing these special projects that aren't anywhere in these numbers. Big bridges, tunnels, some rail projects that really are national projects but implemented in these locations. And there's some information that's not here because the local government is afraid if it's too transparent, the central government will take it. So all three cities are successful in different ways, but we were looking at one specific aspect of fiscal decentralization. If you try to look at the expenditures across the three cities, the classifications are so different, the terms are so different, not very helpful, so I'm going to go to a more general comparison. And the big difference between the three cities is that Jakarta spends about 3/4 on routine and about 1/4 on investment. In the other two cities, it's more divided. But I don't think this is really very helpful. We're not quite sure what other is. And what sometimes is called capital expenditure are basically special projects. But the biggest expense in these projects are people, again, salaries. And my guess is if you rearrange this using common classifications, like most cities, perhaps 2/3 or more would be on routine administration or small investment, and maybe 1/3 to 1/4 would be on major capital investment.
2/3 on the routine. Yeah.
Because the really big infrastructure will need central government assistance as a national strategic project and often involve the private sector and public-private partnerships, and you won't see that in a lot of these budget numbers. So this is just giving you an overview of specific examples from three major cities in Asia. Without going into too much detail, and we're about time for a coffee break, but does anybody have any questions or observations before we take a break? You could think about it. We could also talk about it over coffee and tea. And we were coming back to Indonesia later in the week, at least twice. So maybe think about it a little bit. And then when we revisit these countries in other sessions, we'll also be returning clearly to Vietnam with many examples and some from China. This will put it into context for you a little bit, and we can return to this when we, as I said, revisit the countries. We take a break before we talk about taxes in Myanmar. Yes? Thank you.